Okay, so Hewlett Packard, I keep getting into this. I have a fundamental scanner, and this scanner, it's been coming up over and over again. And I haven't seen it in years, and most of the time I'm not much of a stock picker, so I kind of look at it for breadth. But noticing that some of these really old tech names, like you said, Dell, HP, HPQ, all of these are actually looking really good. Valuations are good. All of these things are good, even on the fundamental side and the technical side. So it's like it's kind of cool to watch that rotation happen here
Mm.
now.
That's what I just did a whole interview on with TD Ameritrade.
Nice,
So,
nice.
which, this is what's been great about these interviews is that it gets me to look and think about things that I probably wouldn't ordinarily look or think about.
Yeah,
So, yeah. So, yeah, I mean, like, and then so interesting is that the solar stocks all got green today while the mega cap, and, I start to think that that's a good sign for the economy in certain levels
hmm,
because we know that these mega cap growth stocks are hiring.
yes,
On the other hand, what do they really do for the industrial manufacturing infrastructure, supply demand chain that we need so much in this country? And then they're all based on cyclicals. So people have to really be feeling good about the economy if they're going to go out and upgrade their computers and buy new iPhones, et cetera. So when people get all excited about these things, I start to get a little bit nervous when you don't
yes.
see those, when the modern family is not necessarily all participating anymore.
Well, that was what was a good call of yours this year too, which was, the the fangs basically getting out of the fangs at that time. That not saying that they're going to fall apart, not saying that, but there's better places to be. And I think a lot of people, I remember, a couple people having like bad reactions to that, like this has done so well for me this year, it has to continue to do well for me next year and forever and ever and ever. And that's one of your strengths is being able to move, find the trade, find a nice strong space to be in, a good sector, have vision of what it's going to do, and then get into that trade at a good time.
Well, I think the thing that I'm most proud of myself this year is figuring out how to capitalize on the alternative currency space without actually having to buy a Bitcoin or a Litecoin or a Dogecoin and doing it through how we've done it, which is through Riot or Canaan or GBTC. And now
Yes.
we took a profit today in ETHE,
Yeah.
following the Ethereum. To me, that was because as a baby boomer, as much as I hate to admit that, it's true. So and I wouldn't say as much as it used to be because I've gotten a lot more younger people, millennial and Gen Z people in the service this year, more than I've had ever.
Yeah.
But still, the bulk of our service is still older people, a lot of retirees. That getting them to think like that has been also very gratifying. Getting a little tweet from somebody who I know is well in their 70s going, yeah, way to go on ETHE. Happy Easter. So, so yeah, that's really, I think the name of this game is, yeah, yes, legacy stocks are doing well and the FANG stocks are doing well. But up until this point, what got us through last year was buying some of those newer tech stocks like Datadog and Teladoc and Fastly, getting in, getting out, and then
Mhm.
moving back into more traditional stocks, and then doing the commodities, which very few people know about how to trade these commodities. And again, finding a way to do it without actually having people opening up futures accounts, which
Yes.
horrify people.
Yes.
So it's been a real interesting, you have to be a bit of a chameleon here in this market constantly. Right. And being the only person and female person, no less, going on Fox up until about 3 or 4 weeks ago to say, Microsoft, dead, dead. These guys are going, I would just keep buying it on the way down, on the way down. Now, today they
Yep.
look smart, but a lot of people were underwater for a long time. So the market timing is something I'm trying to teach people on the news that I'm not a passive investor. I'm not going to be a Kathy Wood and say, just
Mhm.
keep buying Tesla on the way down. I'm going
Yes.
to wait for the day when I see Tesla bottom and then say,
Mhm.
okay, now's it.
Yep.
So I think people are starting to figure that out now, is that I'm more about the market timing
Mhm.
than
And
anything else.
that's an interesting point, and it's funny because, you still even have people who are like, wait, why would you buy and sell Bitcoin? Why wouldn't you just hold it forever? And they don't really get that, you're basically, and same with me, is I want to continue to find where I want to be over and over and over again. And as long as I can continue to rotate into something strong, get out of something. It doesn't matter that Microsoft they look smart today, but we've been in certain things, and you've been in your group in certain things that have been done very, very well, and have continued to be very, very strong in this market, where a lot of people have had a lot of trouble, especially Q1. Q1 was tough for a lot of people, but if you look, especially looking at your Modern Family model, looking at that, you can see there was places that did perform very well. A lot of people maybe didn't want to get into those, but they did very well. Transports did very well. Energy did well. A lot of things in Q1 did well that just nobody's wanted in years because they just haven't performed well. That doesn't
Right.
mean they don't perform well forever.
Exactly. And that's Bob Lang, who is somebody I follow on Twitter, is a good friend of mine who does a lot of options trading. He
Hmm.
always says, we're in the moving business, not the storage business.
Yes.
Yeah, and that's true. And Keith and I have sat through 10, 20, 40, 50, 60% downturns in the market, and
Hmm.
we've never been hurt by them.
Yeah.
And there's always that attitude that the market always comes back. No matter what, it always comes back. But we know, because we're old enough to know,
Hmm.
that that's not also necessarily true, because we sat through, well, didn't have any idea about the markets in 1969,
Hmm.
obviously, but from 1969 to 1982, the market just stagnated. So
Hmm.
if you had your money and were counting on that as your retirement money, you made no money for 15 years.
Yes.
If you look at the Japan model, which I always like to talk about, the Nikkei, which peaked in the late 80s, still has not gotten back to those levels 40 years later.
Yes.
So it's not that markets always go up. And
Hmm.
even if they do always go up, who needs to sit through a 50 to 70% correction like we saw in
Yes.
2008? And then again at the beginning of 2020 when we went down 40, 50%. So
Hmm.
that's just my style. Not a style for everybody, but that is always our style. We cut our teeth, as you know, on the commodities exchange.
Hmm.
And we saw the hot, 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 hot market in gold, and then it went dead. So the hot, 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 hot market in oil, and then it went dead. Same
Yes.
thing with coffee and sugar. And so we've always learned that you go where the money's flowing and never attach to anything for too long because things go through cycles.
Great lesson there. And that's the thing that's one of the questions I did have for you. What drew you initially to commodity futures, being kind of the first place for you to go to?
Well, it had all the sort of qualities that suited me. First of all, I am extremely hyperactive and I was young,
Mhm.
so way more hyperactive than I am now. And the physicality of it appealed to me, the fact that you could be standing and moving and always, having 100 things to look at once.
Mhm.
I love that aspect of it. From a trading aspect, the fact that the commodities, I got there in its heyday. So we're
Mhm.
talking 1979. And in 1979, that's when sugar and coffee and soybeans and gold and silver went ballistic. So when I went down to visit, the stock market was just coming out of that 15-year stagnation. That wasn't the place to be.
Mhm.
Nor did I really want to be a stockbroker. That didn't appeal to me. When I went down to commodities and saw that commodities really is the putting your finger on the pulse of everything that was going on in the world at that point. Because let's face it, what do we need? Companies come and go, technology evolves and devolves, but raw materials that come out of the ground, there's only a finite number of them. So when I realize what countries will do, what people will do, what investors will do, when you get that emotional reaction to we need commodities, that really appealed to me as well.
Yeah.
And I won't lie, I was young in my 20s and single.
Yeah.
And there were, so I kind of stood out a little bit,
Yeah.
which was great because I didn't go down there like I'm a girl and there's a bunch of guys. But I did find that the attention that I got, I could use it any way I wanted to. And mostly I really used it to get mentored by some of the top traders at the time. I learned from the best of the best of the best. So that was a real plus for me. They taught me how to kind of man up a little bit. And I also learned a lot about how men respond when they're in a very stressful situation. And it
Yeah.
made me realize that if they're bumping me around or grabbing me and just shaking me or what have you, that was nothing more than being in the men's club. And that's because that's what they do with one another. And then joke with each other and constantly make fun of one another. And when I realized that, I was like, okay, if they make fun of me, that's okay. It's
Yeah.
acceptance.
Nice. Nice. That's and then the next question was we were wondering, so what was you got into the commodity futures at that time, and that's a time, but I have most of my futures models are kind of made for that time because I kind of feel like this is kind of coming into that time all over again, maybe a little bit differently, of course, but we're kind of getting there with commodities. And so I wondered, what was a strategy that you liked or used around that time? You said you had mentors. Maybe you had a mentor that kind of said something that really stuck with you, or you found a strategy that was, okay, this is when I'm buying and this is when I'm selling, because you have extremely great risk control. I think you've even said that you'd never blown up before. Yeah, so
I rarely even on a year-to-year basis have come out either flat or ahead. I cannot remember like a losing year.
yeah,
To me, flat is a losing year.
yeah,
And generally, it's more related to my own personal focus and not the market because I can trade any market condition. And
mhm,
that's one of the things you learn on the floor. And by the way, kudos to you. One of the things I absolutely love about you, Jason, is that you are looking at the history of the commodities market. And it is for the same reasons it attracted me, it seems to be attracting you as well.
oh, absolutely.
So that puts us kind of in our own little club, I
That
think.
was how we kind of met, which was we were talking about commodities, and I was talking about Richard Russell, and so I learned all and it was funny because it's like that with my bike riding career. With every career was always me learning from the oldest of the old school people, and people like still to this day, people are like, you've read Richard Russell's letters from like the 50s? I'm like, yeah, I read all of those, and to me, reading through those and then kind of going through, and especially now that I have the data to backtest that period and kind of looking at this period and going, oh wow, this is getting really interesting. And that's what was very cool about you is that you not only have you had the idea of stagflation for I want to say since 2019 about you were talking about this, but you've traded it well. A lot of people have these ideas, we're in deflation, we're in inflation, and everybody has these ideas, but I don't know many people who can really trade it well. So maybe that goes back to the first part of the question is, like you said, you had all these, you could trade every environment, but what was the first environment, first thing, first strategy that really stood out to you?
Well, the first thing that I learned on the floor really was about point and figure charts
Mm,
because I was day trading mainly when I got started. To be able to actually use your tactile sense to watch the price go up and down with a series of X's and O's internalizes it in a really strong way than just watching a screen does.
mm,
And along with that, X's and O's and starting to see patterns emerge. And then people taught me about consolidation and trend lines and flags, all the basic technical patterns that have been around forever. What really drove it home was that I'm also living it through the other senses so
mm,
that I could see guys piling into a particular pit because the order flow was starting to increase, or some piece of news came out that I didn't even know about because it was well before there was any kind of phones, cell phones.
Yeah.
So I didn't
Yeah.
see news going by. I just saw price going
Mm.
by. So I was able to take the price that I was charting along with the other senses and get this idea of momentum, which now all these years later, as we at MarketGauge have actually tracked through an indicator called real motion. But on the floor, it's really the invisible way to understand. And that's what we saw in the big tech, that the price may be sitting there at a point, which
Mm.
some people will say never short a dull market. But at the same token, if the momentum is declining,
Mm.
on the floor, you saw it because all of a sudden there was less order flow, there was less guys standing in the pit. All of a sudden, everybody was looking at what was happening over in orange juice, let's say,
Yeah.
and not necessarily in gold. And so those are the lessons that you cannot replace,
Mm.
is that experience of being there in a full-on 5 cents and sometimes 6 cents. For me, especially important, the 6 cents, because I was not able to stand in the pit when things got insane because I just physically was so much smaller and couldn't, my voice didn't carry, that I had to kind of look and see the eyes to know when something was going to shift.
Yeah.
And
Yeah.
I learned to do that. It was just a little teeny shift you might see in a few of the guys' eyes that you knew, uh-oh, we're all caught long, and
Mm.
I just got one hell of a big short order to
Yeah.
sell. And that's, Keith's got that, Jeff's got that, I've got that, but I have it from a different perspective because Keith was in there doing battle.
Mm.
But not me. I would jump in and out, jump in and out. When it was slow, it was better. But I started actually sometimes passing orders into the ring so that I could have some level of self-preservation
Yes.
without getting hustled about too much. Not that I ever got hurt there. It was just I couldn't think.
Mm.
And I certainly couldn't scream. So I schoolyard whistled my way a lot, but I would then deafen the guy next to me. And he said, Mish, please don't do that anymore. So those were the first 3 lessons. There were a couple of others, though, that are so invaluable. When I would have any kind of a losing couple of days, for me, again, losing was not making money.
Mm.
I could not afford to have any risk involved because I had no money. I had money after a while, but I started out with no money. And that mentality kind of stays with you.
Yeah.
So the guys would say to me, bad mentality. You have to come into this place. And of course, they didn't use buzzwords like abundance back then,
Yeah.
but they would
Yeah.
say, go out and buy something really expensive, even if you're losing money. I'm like, oh, no. They say, no, if you go out and buy something really expensive, you're changing your mindset. And you're thinking not from this fear, but you're thinking like, oh, I can actually afford to buy that really expensive thing, even though I had a couple of losing days. And essentially that feeling of abundance or getting over the fear of losing is really what has that whole thing came to. As I got older, I realized what the lesson was for me was that never be afraid of taking a loss, as long as it's a controlled loss. Just get right back in there, which I do. I'm fearless when it comes to that kind of thing. I can have 3 bad trades in a row, but it won't stop me from the 4th trade, and that could be the one that makes up for all the money that I just lost in the last 3.
Mm-hmm.
And then I think the other thing is about adding to your winners. Because my natural inclination when I was younger, again, and less experienced, was I had a really good day. You know what? I'm going to leave and I'm going to go to the movies, or I'm going to go shopping, or I'm going to go for a run, because I ran my way through the 13 years down on the floor. I had a train. It was like a full-on training.
Yeah.
I mean, believe me, there was a lot of partying going on. It was the 80s, but I always had to take physical care of myself, just because I couldn't go in burnt out the next day and perform. But anyway, so this whole idea of what are you leaving for? You're having a great day. You should be trading more. And I'd be like, oh, I had a great day and I made a couple of $1,000s. What more do I need? That kind of attitude. And they taught me that was wrong. If you're doing well, and obviously you've positioned yourself into something that is gaining in momentum and in price, buy more. Just use a different risk parameter. So all of these really, I think, are things that most people do not learn when they start trading. They may learn about charts and they may learn about different chart patterns, and they use all different types of indicators, the MACDs and the Fibonacci's and all this other stuff. And that's all great, fine if you want to use it, but they're all in my soul because of that market timing that I learned back then, and the macro that I learned because I could see, oh, gold's out of favor, but now we're moving into treasuries because there was also the Finex market was down there too. So that was, oh, well, why is that happening? Why is gold all of a sudden out of favor? You know, and that was really, I think, what did it for me. And that's why here we are all these years later. And instead of being burnt out on it, I'm probably more excited than ever because the market has so much great opportunity.
Yes, absolutely. And those are all fantastic lessons. I'm going to have to watch that again a few times myself. But that's the one thing I have always noticed about you is that and you might not even notice it sometimes. Sometimes you're doing a lesson and all of a sudden you'll just be looking at the price, not even the real motion momentum indicator, nothing, and you'll say this is panic, this is this. You'll almost have this intuitive, you can see these people putting on the trades thing, you know, and you know, it's so cool for myself to learn because I'll never have that chance to really learn that, but to see it and watch you do it, that's to me that's worth the price of admission. You know, like just in itself, just to see you do that and understand why you're doing that in person, watching you go through your charts is really interesting. So that's very cool.
Thank you. And in terms of like another question I get a lot when I'm interviewed, like recently the whole Archegos thing, and that guy lost like $100 billion or something. Do you think that this is going to affect the market? This is the question I get all the time. And you know what, Jason? It's really just this very moment I'm having the revelation on why I always answer the same way. Well, maybe temporarily, but there'll be plenty of other people there to pick up the pieces and buy.
Yep.
And so what I also learned down there, I saw guys be carried out, maybe not literally being carried out, but metaphorically being carried out because they've lost everything. Whether they were highly leveraged like this guy, or they were doing too many drugs, or they just thought that they were infallible and just kept buying and buying and buying, or selling and selling and selling. By the way, the other great thing about commodities trading is you learn how to short. You're not afraid of being short. I always say being short is kind of counterintuitive to being a good American because we always want to see everything go up.
Yes.
But as we know, things can go down very quickly and you can make a lot of money in them. And I'm not saying going short like the way that these companies did, having this huge short float.
Oh, yeah.
GameStop or American. I just want to make that clear. I'm not advocating for 140% short float. But getting back to the Archegos point is we would see different brokers or different companies that were going out of business have to liquidate, and that would have an impact technically for a little bit, but it didn't change the fundamental picture.
No.
So it's only when you see that shift in the fundamental picture that you say, okay, maybe it's time to go somewhere else. And so that's why when I get these questions, like, well, do you think that's going to be the end of the market? Or you think this is going to be? No, nothing is going to be the end of the market. It's just going to be either a temporary shift like that or a rotational shift into something else. Always opportunity.
And another thing that you bring up in that question is something that you have great returns every year, at least that I've been paying attention. You have great returns, and like you said, you can't really even remember a down year. And in another sense, you don't really. I don't watch you. You trade straightforward. Here's the stocks. Here's the ETFs. Here's this, and you're not using crazy leverage. You're not using options. You're not using any of those things. Is there a time you ever used those things, or is it something that I know you've traded futures, but there's ways to trade futures well, and then there's ways to take out way too much leverage and blow yourself out too. So is that just kind of a lesson that you've learned from the floor? Like you said, you're watching people metaphorically get carried out of there, which is usually a leverage thing. You really aren't going to blow up completely unless you use crazy leverage.
I've looked into some of the more leveraged instruments, and in the past, I've traded them if I'm extremely bullish and I'm getting in what I think is at the bottom. So, for example, if I see a little bit more proof that gold is bottoming, which, by the way, considering today, you couldn't have had more good news in the market,
Hmm.
and gold did not fall apart.
Yes.
Gold really kind of stayed there, right? So that might be the kind of thing where if I see a little bit more proof to me, I would say, okay, how do I leverage more in the gold? Now, we have been leveraged a little bit more in some of our commodities positions over the last year. We had more than 100% position in coffee. We had more than 100% positions in sugar through the ETFs. But
Hmm.
I haven't done the 2 times, 3 times, 4 times leveraged ones too much. We have models that do. That's what they do.
Hmm.
So as a discretionary trader, what's really given me a lot of freedom is our models, our
Hmm.
five quant models, because they take away a lot of the things that I don't have to focus on anymore. I don't have to find the NASDAQ All Stars. I don't have to
Hmm.
find the All Stars in the small cap growth stocks. And I don't have to find the highly leveraged ones either, because we're doing that through algorithms, which is much better as far as I'm concerned, because we use risk control and it takes all the emotion out of it. And then
Yes.
I just tend to be kind of a conservative. I've actually traded less conservatively since the pandemic than I have probably ever in my entire life. And I think it's because I got so clear. And I really credit that with these interviews. When you are on camera, or at least when I'm on camera, I can't speak for everybody, but when I'm on camera and I'm looking at this little teeny peephole, which I'm looking at right now instead of at your face, because then I'd be looking down. I'd much rather look at your face, by the way, but that doesn't stand for everybody that interviews me. But there's something like everything gets channeled into this one little teeny little peephole. It's like a meditation almost.
Hmm.
And in that filtering of all my energies and all my mental capability into this one little hole, essentially, I get this weird clarity.
Hmm.
And when I get this clarity, I don't abandon any of my rules, because I have hundreds and hundreds of people who are in the service counting on me to be clear. But
Hmm.
what it has given me was giving me a little bit less of the ultra conservative, hence going back to why I've been able to buy things like Riot and Canaan and MicroStrategy, and now most recently the GBTC, and now the Ethereum ETF. Well, not the ETF, but the trust.
Yeah.
So because I've said, wow, I have such clarity about that. If I'm going to say it on Fox, if I'm going to say it on TD Ameritrade, or wherever it is I'm talking, then I should be doing it for you guys.
Hmm. Very cool. Very cool. Yeah. It's interesting, and another point of last year, which was you really nailed a lot of things last year. And I think one thing that was really, and you and I have talked about this privately before, which is was what was overlooked was your dollar call. The dollar call was phenomenal, and you were, and I still was actually on the bullish side for a bit, and then the second it broke down, you were already bearish. The second it spiked up, you were done with it, and you had it nailed, and it was like, nobody ever talked to you about that. So I made a note here to make sure to ask you about how did you make that call so well at that time frame, because it was basically it was sitting in a very tight range for a little while. And before, for myself, like, I'm really, if it breaks that level, I'm the type that, okay, I'm short. Then you were already short, you were already talking about, you were very vocal about it, and everybody, and I love that, because that's helped me so much in my trading, is watching you be on one side of the world and everybody else be on the other side, and you just kind of like, yep, that's the way it is most of the time. When it's like that, you're probably right, and I just wanted to ask you, how did you think of the dollar last year?
Well, first of all, thank you. And yes, you started the hashtag Don't Fade Mish. I love
Yeah.
that. Actually, you could see as I was getting bullish the gold, how many people were arguing with me about the fact that gold was just going to continue to go down. Gold is dead. Nobody wants gold, et cetera, et cetera. I get encouraged by that, actually, when
Mhm.
that happens, because what that tells me is that the masses are just wrong. They're just
Mhm.
wrong. And the same thing kind of happened with the dollar. All the principles on why people were bullish the dollar, I did not see. I saw already the switch to cryptocurrency.
Mhm.
That was number one. And digital currency. I saw what China and India and Russia were talking about in terms of how can we And they're less so talking about it now, but at that point, how can we destroy the dollar as the world's reserve currency? Because what is the ultimate way to get back to this country? It's not sending an airplane into the World Trade Center. It's either shutting down our entire infrastructure grid system, or it's killing our dollar, which will kill us. The other thing I saw was I saw, you and I have been talking about the food commodities. I saw the food commodities going up. I saw the industrial metal commodities going up. And I thought about our face in the world was going down at that point. And I put all of this together and I thought, how could anybody be bullish the dollar? I mean, it just doesn't make sense right here. The dollar has peaked. And then in terms of the evidence of the chart, I was able not only to see that the highs were getting lower, but like you said, it was compressing here, almost like it was the last gasp before it broke down under a major 6 or 7 year cycle. Once it broke that, I got really bold. And, I tried to debate Raoul Powell, who was, the dollar, the dollar, the dollar, and all these people were the dollar, dollar, dollar. And I wrote an article at that point, one of the dailies, which is 10 reasons to be bearish the dollar. I don't remember all 10 right now, but yeah, I turned out to be right. And I was one of the first people just a month ago to say the momentum has shifted in the dollar and now it looks like it's bottomed for now. And then last week I came back out. I don't think I made a public announcement, but certainly in our live coaching, I think the dollar here is going to stop it between 93.50 and 94. And if it breaks 93, it's probably under pressure again. So yeah, it's just, again, I don't know. I can't necessarily say it's X, Y, Z other than what I gave you. It's also just my own, how I can look at how reactions are to investors, to people, to all different types of things and trends, and then kind of see beyond that a little bit.
And then you not only nailed the call, and you traded it well, and that's the thing it's such a one thing that I talk about so much is the fact that there's a big difference between talking about something and trading something. I could nail every single call, talk about it, write it down, whatever, and I could trade it terribly. That can happen. Or the opposite. I talk about it all the time where your win rate sometimes can be the worst thing ever. You have so many losers in a row, but then you have your winners are just so outsized. For myself last year, I had a great return last year, but it was all a few trades. I could think of lumber and some of these trades that were just so insane that they made up for all of the bad trades. And the thing that's awesome watching you is that it's always here's my view, but you're waiting to trade it correctly. You're always waiting for your right entry, your right exit. And that's really powerful. And I think some people might not understand how important that is until you've been trading for a while. But to me, that's everything.
Well, again, it goes back to the floor. I was so fortunate to be down there during that time because you learn to think like a macroeconomist, but you have the timing of a floor trader. And that's why most people lose money. It's like you say, they get attached to an idea, they have a thought, they get attached to their own thought, and they think, well, I know this is going to happen. And again, down on the floor, we may have known when an OPEC meeting was coming up, because I spent most of my years down there trading oil, actually. And that was the greatest commodity to trade because not only is there a macro picture connection to the macro of the world in terms of demand and economic growth, then it's politically controlled by OPEC, and then you have geopolitical concerns with war, and I lived through the first Persian Gulf War, made a lot of money at that time. It was almost like the perfect master of understanding the macro, but it didn't matter because what the timing was everything. And the perfect example was that is 1986. Oil dropped to below $10 on the commodities exchange, and it dropped really low in terms of the Brent crude oil. I don't remember the exact price per barrel, but on the commodities exchange, in the spot price, I guess it was probably about 10. It dropped below 10, and all the news people came down to the floor. And I got interviewed, actually, because I was the only female in the pit at that point, and I think they were just like, oh, yeah, let's ask her. And I quoted in this article, I couldn't possibly tell you. I actually have it saved somewhere. It
I
was in
think you posted a picture of it once.
right,
Yeah.
right, right. And I remember saying to them, well, yeah, oil just went to historical lows because of the glut in the market, et cetera, et cetera, et cetera. But all the bad news is out of the market. If it turns here, it's probably going to be a good buy.
Mhm.
Low risk buy. I'm always looking for the low risk buy.
Yeah.
And I think that was the moment I said, you know what? It doesn't matter. By the time the news people show up down here, it's old news.
Yeah.
That's really the difference between a floor trader and somebody who's just using the macros to say, well, I know this is going to go up eventually. And that's why I sit there on the panel with these guys. And I have a lot of respect for them. But they'll say, well, Microsoft is a great company, but they watched it go literally down about $40, which is
Mhm.
a huge price drop.
And that's what some of the people like us, we would not want to be in that. And that's, to me, it's even if the market is, let's say Microsoft's the market, let's say the market from here rages, it just goes up another 30-40%. Even if Microsoft goes up 30-40%, I want to go into the thing that's going to outperform everything else. And, right now, and most of the time, it is the strongest thing. You don't want the laggards continue to usually lag. Now, yes, that does shift over time, and there's ways to find those shifts, but the laggards are lagging, and then you're able to get into those things. That's what's very interesting about, and everybody in my group knows, like the Modern Family is yours, and I still use a lot of stuff from that. My initial background in trading, the first thing I ever learned that was helpful to me, which was Dow theory, just basic Dow theory. And then, you took it another step, which is you have all these extra things. And then it's another step where it's not just these, after basically the way originally it works is once it's almost over, that's when it's confirming each other. And you're like, you're buying right now. I mean, it would have been the Dow beta high, then the transfer made a high, then you would have bought both of those. And that's not the way you do it. And that's not the way I do it. I want to see these things confirming each other. I want to see them moving, and I want to see what's the strongest, what's the weakest. And also, like you point to, which is here's these risk on sectors. Here's these sectors that tell us about the internal economy. So, and that's such a powerful system to use to really understand where you're at in the macro environment. So that's very cool.
Yeah, I love the Modern Family, and I did not even know what I was doing when I started thinking that way. It was really more just a fun way to write a daily to humanize what I saw to be the most important sectors of the economy and the market. And
Mm.
then as I started to humanize them, they didn't have any kind of image. So then I met this woman who's a cartoonist, and she helped me create the image. And then I met this woman who's a doll maker who made the dolls. And actually, we're going to be working on a second book about the Modern Family because there is a lot of science behind it, and it's definitely a huge key to understanding everything and perfect your market timing. But I just want to go back to this, Microsoft versus, let's say, Fastly, which
Mm.
now has been well underwater compared to Microsoft. But I also look at it kind of like I grew up, my father was a huge boxing fan. And he also was a black belt, fourth degree in karate. So I grew up around martial arts and boxing, which, by the way, also made me very suitable for the floor because I kind of grew up as I went to football games and baseball games and basketball games and boxing matches and karate matches. So I was used to that type of environment. I loved it. But my father would say that a good heavyweight boxer is probably with a much more boring fight to watch, and you want to watch the welterweights because they move around a lot more. And it's kind of like that with the stocks. Microsoft is like George Foreman.
Mhm.
It's a little heavy. Okay, now he's having a run here, but eventually it's going to be the stocks that don't have all that mega cap baggage to them that can move percentage wise, because if the price is this high, percentage wise, how much higher can it go? Oh, well, you can look at an Amazon at 2,000, but how much higher is Amazon going to go? Whereas you get a stock that's trading at $100 and it's a hot company, we
Mhm.
know that it can double easily. So I'm looking for those doubles and triples at this point. I'm not looking for something that's just going to go up $20. That's just makes my life a lot easier. It's just so I don't have to think about everything.
That's a great way of putting it, heavyweight boxer. And I have it in my head because I watched a lot of boxing growing up, thinking about the George Foreman kind of, especially later in his career, he had one last fight where he's kind of basically he's kind of walking around the ring and all he did is get one great punch in. It's kind of what Microsoft and Apple did, they both fell really hard. They kind of got their one punch in. It's probably the end of them in that sense. Yes, sure, they could go up, but double, triple, I don't think so. Same with your trade on ETH over Bitcoin. That it's the same type of thing. Can Bitcoin double from here? Maybe. Anything's possible. I wouldn't put bet against it, but could ETH do it? Yes, absolutely, very very easily. So it's a great way of putting that. So another one I have for you is you had last year you're talking about your mega trends. 2021, what do you see? Because for my view, I still like the commodities. I still think there's a lot to go. There's certain things that I don't know. I'm in a lean hogs trade and I'm in a lumber trade still. And so these two trades are just like I would have never dreamed in a million years where they're at and still being in them. Very happy. But what would you think would be the next trades to be moving to? What's your mega trends that you're looking at? This could be sectors, commodities, anything that you're thinking of.
Well, definitely the cannabis space, and I've been a little bit perplexed by the fact that the cannabis stocks have just kind of died here. But I think, again, all of a sudden the attention is into the mega cap stocks and the FANG stocks and the big tech stocks. So they've taken the thunder a lot away from some of these other companies. Electric vehicle companies is definitely a mega trend, but more than the electrical vehicle companies themselves, I'm very, very fascinated by how are we going to provide all the electricity to power this? So all of the grid technology and the electricity distribution is a megatrend I'm paying very close attention to. Yes, with raw materials, we've had a legendary period from the pandemic that I think people underestimate, which is supply chain disruption, the labor force, which has not come back into those areas. And as a result of such a glut of a lot of these commodities for years, a lot of the production got halted to try to raise the price at a time that they couldn't possibly foresee what's happening now, which is, of course, is what we're seeing with steel and lumber and coal. And we know that there's a limited amount of it around. So I still think we're going to see that. And I think, listen, there's always going to be inroads with cloud technology and AI and virtual reality, which is something that I find particularly fascinating. And because I think more and more Facebook is actually one of the reasons why I bought Facebook instead of some of the other FANG stocks was because I know they're big into the virtual reality space, recreationally, like where people are going to go on vacation. Yeah, people will travel, but there'll be a lot of people who will say, well, why don't I have to travel? I could just put these on and next thing you know, I'm on the beach in Jamaica, or something. So it's one of I'm not a beach person, but I love being in Jamaica. So I'm looking at those, but right now I cannot wrap my mind out of this stagflation thing. I can't lose it. I always say it's like my Brokeback Mountain megatrend because I can't quit you. And I can't quit it because I keep asking myself, even with all the great intention of having an infrastructure plan, which will create jobs. And obviously we need desperately to fix the roads and the bridges and the airports in the country. That I think can spur economic growth, but if it gets kind of stymied in the political process, which we know is entirely possible.
Absolutely.
Where is the growth going to come from while all of these raw material prices keep going up and up and up? And what does that spell? That spells stagflation. So it's fun to buy the stocks now, but keep your eyes. So, in some way, those yields going up has been a precursor to the stagflation because notice Powell didn't really say very much about the short-term yields, which is why we had that little swoon in the market in early March, because he didn't address it. And I think the reason why he didn't address it is because part of him is going, that may keep inflation under control for a while. But we know, well, we who have been there know that even a yield at 1.7 or 2% in the short-term interest rates may put a little cap on, let's say, the mortgage rates because they're tied to the mortgage securities. But it's not going to stop the train from coming if the train is coming. And if we can't get our GDP up, if we can't do that, and we're still a very fractured country because we know that half the country didn't vote for Biden, number one. Half of the Republicans are still thinking that the election was stolen, are still suspect of anything that the Democrats do, still suspect even that what happened on January 6th was nothing more than a bunch of left-wing people showing up as Trump supporters, and it didn't really happen. I mean, as long as we have these constant conspiracy theories in this country, and it's a free country, and we love that about this country, I wonder how much is actually going to get accomplished. I'm hopeful and I pray, because I live here, that it happens. But like I said, I can't put this, we need some pain first. And that pain, and I don't mean pandemic pain, because even that became political. I mean the pain of the true divide being seen, because we just gave a lot of people a lot of money to survive this pandemic. But what's going to happen when the dollar goes down and the cost of goods go up and the economy is just stagnating because these corporations have gone back to buying up their own stock, not doing research and development, and not hiring. Trump did them a favor with these very low taxes, but if that's taken away, it makes you wonder what's going to happen going forward.
Yes, great explanation, and especially on the point on the yields. And this is like for myself, we had a good trade last year going into this year, which was I've been short the 30-year this entire time. I'm still short the 30-year. And, you know, that's another trade. And I would even credit working with you on the fact that that was the second it started falling even a little bit, yield curve control is coming. Yield curve, you know, every single person, there's no way the yields can rise anymore. No way the yields can rise anymore. You know, still to this point, everybody, there's no way, but you know that this could go. I mean, looking at you could go back and look at any chart. There's plenty of room for these to move, you know, and I think everybody really isn't, they're not paying attention to that fact. And once that's going to put so much pressure on the market, like it already has. And like you said with Powell, it was almost, to me, it almost looks like it's like, okay, tech is kind of the sacrificial lamb. Here's this overvalued part of this. This will keep a lid maybe on some of this, like you said, maybe on inflation. Not that he's ever going to say we have inflation. We always never have any inflation. There's no such thing as it's a fairy tale. If he clicks his heels enough times, sure. But as you know, we're seeing it. We're seeing it all over and everything. And so the stagflation period, from what I've read, it looked like it put a bunch of pressure on the companies and people and everybody at a certain point. And so you have this a little bit of inflation being okay, and then it's not. And that's kind of what you're getting at, is that we're kind of seeing that point where we're pushing towards that, and then it's not going to be okay. You know, and that's what I see too. You know, it's great, ride the trends for now. Everything's looking to the upside for the most part in the right areas, in the right sectors. But there's going to be a point where that's going to put some major pressure on things.
And we're ready for it. So, Jason, I'm happy to come back and talk to you again. But I do have to say, I will answer one more question and then I have to go.
That was actually everything I had.
Oh, well, that's, wow, amazing timing. So maybe I should have kept my mouth shut and let you say it instead of me.
No, perfect timing. You know, I could keep going forever with you, but I definitely, yeah.
Yes. And I still really look forward to the day when you come to visit us in Santa Fe.
I absolutely will. I absolutely will. That'll be great.
So thank you. Thank you so much for spending this time with me. Thank you for being part of the service and for being such an incredible student and also teacher, because I do watch what you post. I don't follow that many traders, but I'm curious to see how you've really embraced the commodities world. And I did see that you're still short the TBTs, or well,
Mm,
through the TBTs, short the
mm,
30 years. And they're just sitting here. So it's going to be interesting again to see what happens now that we had this great jobs rate
mm.
come back. And one of the reasons why these companies are going up, like Microsoft, is because they have a tremendous amount of hiring potential here. And we'll see what happens from there. But thank you so much. You've been such a great person to get to know over the last couple of years.
Oh, same to you, Mish, and thank you so much. And everybody in the group, they'll love to see this. Everybody's always paying attention to your stuff, always sharing your stuff and talking about you. And I absolutely adore you and everything you do. So thank you so much for coming on and giving so much time and great explanation. So I'll let you know whenever it's posted.
Okay, great. Thank you, Jason. You have a wonderful rest of your day.
All right, you too, Mish. Thanks.
Bye bye.